Things are moving so quickly these days, it's easy to feel overwhelmed. But if you're worried about your super, let me put your mind at ease. Despite recent market volatility and higher costs of living, there's some good news. All Australian super investment options have delivered positive returns for the financial year to date. And importantly, the balanced option, where most members are invested, has delivered strong returns over the 1 year and long term. 8.3% for super accounts and 9.3% for choice income accounts over the last 12 months. Hi, I'm Alistair Barker, Head of Asset Allocation at Australian Super. There have been three key factors driving recent market volatility. First, geopolitical events, driving higher oil prices and concerns about supply chains. Second, concerns about rising inflation and rising interest rates. And third, AI, the potential risks and opportunities impacting earnings and valuations. During the month of March, a number of stock markets, including the ASX, fell by up to 10%. But we invest your savings across a diversified asset pool, including infrastructure, real estate, and private equity. And those assets provided positive returns during March. And that helped insulate your savings from the fall in share markets. And it helps ensure that investment options like the balanced option provide good long-term returns. We understand that it's stressful to see your super balance fall, especially if you're in retirement when you're looking to fund some of your cost of living from your super savings. But in these moments, we find it critical to maintain perspective, and I'll offer three reasons why. The first is that market ups and downs are a normal part of investing. You might be interested to know that falls in the market of 10% or more are actually quite common. They happen around once every 1 to 2 years. Second, things may feel quite volatile at the moment, but they're actually not as volatile as they were a year ago around the Liberation Day events, nor are they as volatile as during the early part of the COVID pandemic. And finally, what matters most in investing is whether economies and companies can continue to grow through these periods of volatility. That's what we've seen over the last 5 years, and that's why investment markets have managed to be very resilient, notwithstanding the shocks that we've seen. It's important to remember that super is a long-term investment, and it may be tempting when you see market volatility and your account balance fall to switch from the option you're in to cash. But that creates three potential risks. The first is you may be locking in losses. The second, you may miss the rebound in markets, and through history, those rebounds can be quite sharp. But third, and perhaps most importantly, you may miss out on the long-term compounding of returns in your account balance. In volatile markets, discipline tends to be the most important factor in long-term investing success. And keep in mind that Australian Super has a team of investment professionals, including myself, who are here to look after your savings, so you don't have to worry. Investment markets may remain volatile in the short term, at least until there's a longer-term resolution of the situation in the Middle East. We continue to focus on positioning your portfolios to generate strong long-term investment returns, analysing scenarios, looking at potential market reactions. If you'd like to know more, please visit our website